Empowering the world through connection. We believe strategic partnerships are the catalyst for scaling businesses, driving growth, and creating lasting impact. Welcome to the podcast.
Okay, welcome to the podcast, everybody. We are introducing Sterling Birdsong here. He is on, we found him on TikTok, actually, talking about SBA loans, and he specializes in this area. And I wanted to just introduce you guys to him. Love what he talks about and his expertise in this space. And just wanted to be able to get him on here and provide value for what we can. Sterling, great to have you.
Yeah, absolutely, Justice. Thank you for having me. Absolutely my pleasure. Happy to talk about as much SBA as you and your people want to know about, and we can definitely talk about business acquisition as well.
Let's do it. So I want to know, Sterling, about like your story and how you started specializing in SBA as well. Like what kind of makes you interested in this type of loans for buying businesses or even commercial real estate?
Yeah, so to be honest with you, I got into SBA by chance. It wasn't like I don't think any kid grows up dreaming about being an SBA per se. I had certainly other dreams about, being an athlete or an entertainer and things of that nature, which are more commonplace. But no, I graduated from school in 2012, had a degree in entrepreneurship. I kind of fell into banking. My mom actually worked in a funeral home. She did a funeral for somebody who ended up being very high up at a bank here locally in Tampa. She said, "Hey, I have a son that needs an internship credit to graduate." And he said, "Yeah, sure. Why don't you give these guys a call and tell them that I sent you?" And he was high enough up at that bank that it was like a no-brainer. They just hired me basically. And so I got extremely lucky from that aspect. But I got in there and I just worked really, really hard. I quickly realized that I was not supposed to be in that room, and I got very lucky to be there. And so I outworked a lot of people around me. And then that's back when I was an underwriter. And so I stayed as an underwriter for 3 years, transitioned banks during that time. And I was just the squeaky wheel that kept on saying, "Hey, I want to be a sales guy. I want to be where people are making more money, having more fun, closing transactions." That seemed exciting to me. And so eventually they listened to me. And that was in 2016, almost 10 years ago now. I was 26 at the time. And, they said, "Yeah, we'll go ahead and give you a shot as an SBA lender if you want to take it." And I didn't even know what SBA stood for. I had no idea what I was signing up for whatsoever, but I was just so hungry to become a lender and get out from behind the computer essentially and stop underwriting deals every day, because underwriting is like writing a book report every single day for the rest of your life. It seemed like purgatory to me. And so when they offered me the opportunity, I jumped at it. And the first couple of years were tough. Like anything, you have to kind of learn it on the fly. I was building the plane on the runway. I didn't really know anything about SBA SOP, but I just kept on getting better at it, and I really just fell in love with it. And I really hit my stride shortly after the pandemic, I would say. PPP was a crazy time for SBA lenders. Kind of got through that, made a bank shift to where I am now, which is Bay First National Bank, and quickly became a top producing lender in the space. So now doing on average about $50 million a year in transactions.
That's awesome. And I know like the SBA, just personal experience, seems like they like to shift up their regulations often, or at least recently they just did that. I'm curious to you, when should somebody consider, I know like their cap is like 5 million, but when should somebody consider going with SBA or just like another different type of lender when it comes to these smaller business acquisitions or just even real estate?
Yeah, I mean, to be honest with you, there's not really another product in the space that's doing small business acquisitions consistently besides SBA. I mean, SBA is the product type that's available to people who want to do a $500,000, $1 million, basically anything that's sub $5 million range. Most banks are going to put you in an SBA product, whether you like it or not. Now, when you get to some of those larger transactions, when you get to the place where PE is starting to potentially look at financing your deals or acquiring a business from you, then that's different. There's certainly middle market financing that's available for that. But when we're talking about these smaller mom and pop type businesses, anything that's sub $5 million, SBA is the premier product type for those types of acquisitions.
What do you think is like the most common thing that when somebody's trying to go into an SBA loan, like will either deny them or maybe the person trying to get the loan will tend to overlook typically?
Yeah, I mean, so it starts really simple: bad credit. If you have a really poor credit score and you're looking to get SBA financing, banks just won't finance you.
Right.
It's funny because the SBA SOP, which is the operating procedures, there is no minimum credit score in there. They don't say that somebody has to have a 600 score or whatever in order to qualify, but they say, hey, you, the banks, they task us with being what they call prudent lenders. And so is a bank going to lend to somebody who has less than a 650? Probably not, right? So that's just, right out the gate, if you have poor credit, it's going to be very difficult for you to find financing. Second piece of it is, can you actually afford to do what you're trying to do? Liquidity is important. The down payment is an important piece of this. We do have situations where people are raising capital. Sometimes money may come from an investor. Sometimes money may be gifted to you. But we need to understand where the money is coming from, because somebody has to have the money. If it's not you, it has to be somebody. Because at a bare minimum, 5% down is the requirement for the acquisition under SBA. And that's only if a seller is willing to hold a note on standby for the full duration of the loan to make up the other 5% to get you to the full 10% equity injection requirement. So really, you should be prepared to bring at least 10% to the table at a minimum. So if you do not have the money, you need to find the money, right? It can't come from thin air. It can't be borrowed from someplace else. I see that all the time. People are like, oh, can I use these business lines of credit? I have this LLC. It's been open a couple of years. This guy I met, this TikTok guru, is telling me he'll get me $200,000 in funding. Can I use that as my down payment? No, you cannot. We need real cash that's not being borrowed. The one exception to that being a HELOC. And then the third thing is going to be, what is your experience? If you're going out and you're doing a business acquisition, for example, we want to know that you have experience in this field. Or if you don't have experience in this field, how are you going to bridge that experience gap? Are you going to have a strategic partner who's going to be there? I know the seller may stay on for a little bit of time to help through the transition. What's going to make that seller interested? Are they holding some type of a note? Do they actually care if you're successful? Or are they going to throw the keys at you on the day that you close and just say good luck, right? So you got to have a plan in place in terms of the operation as well. So really, it's those three things are the first things that I talk to a customer about when we're starting the loan process, because if one of those three things doesn't make sense to me, I'm not going to proceed.
I love that. And thank you for explaining all of that. So I actually enjoy the idea of strategic partnerships when it comes to investments and really anything you're trying to do, honestly, business wise. What do you think is the best way? Let's say you don't have that experience in that industry, or maybe you're looking to get the capital to inject for the SBA. How are you going to approach the investor or maybe the strategic partner that we're talking about with this idea of like, hey, we're going to get an SBA loan, and by the way, you're going to probably be the one liable for this transaction?
Well, I'll be honest with you. I mean, most people who are investors are not signing a personal guarantee. They're usually going to keep themselves below that 20% threshold in ownership. That way they're not on the hook for the actual loan. Because if they were, they probably would just go and do it themselves, or they would take a much larger piece of the pie, right? Instead of them having 20%, why would they just have 80% if they're already taking the risk? Yep. Right. And we do see that sometimes where, those people, the investor does take a large percentage of the pie, and then you get a smaller piece, but you are the sweat equity and you are the operator. But the best thing I can tell you to do if you want to attract a good investor is to find a good deal. Because if you find a good deal, money always finds a good deal. There's more people who are willing to stroke a check out there than there are good deals. So if you are working, and you're networking your, what off, and you find a really good transaction, then you will not have a hard time finding investors. There's even websites out there right now where you can go and you can list your transaction so that investors can see it, and they will actually essentially match make on your behalf. But again, the biggest thing is actually finding a transaction that makes sense, that hopefully you are also qualified to run.
So what would be the extent of the experience that they're looking for?
Sure. So, I mean, it depends on the industry. So, for example, if you're talking about something like plumbing, HVAC, electrical, those are some of the hot industries right now that we see with the ETA space. We would love it if you had the licensing. Those are very specific niche industries where licensing is important. We don't really love it when the seller is the one holding the license. That's certainly not ideal. It does happen from time to time, but we would love it if there was a license holder that's actually involved in a transaction, if we're talking about something that's that serious. If it's something that's not license prohibitive, then it can become more of a gray area, right? In terms of, do you have indirect business experience? Like you're saying, hey, you know what? I'm buying a laundromat, and no, I've never run a laundromat before, but I'm an executive level guy at a very good company. I've had people who I've managed before. I think I could handle the operations of a laundromat, right? There's certain businesses where it's a little bit easier for an underwriter to bridge that gap in their mind of, hey, this guy's got operational experience, he's got life experience, he seems like a sharp person, somebody that we'd want to lend to, and this business doesn't seem like it's rocket science. So in some of those instances, we can get comfortable even if they don't necessarily have that direct industry experience. So that's the one thing I will tell people is that all of this stuff is really on a case by case basis, right? And so every lender looks at things differently as well. Just because you come to me and I say, hey, I don't like your experience, doesn't mean the bank next door won't like your experience and actually fund your transaction. And ultimately, it only takes one yes, right? So I'm one option out here as an SBA lender. I certainly think I'm a good option. But every lender out there is going to have their own credit risk appetite, their own credit box, and they're going to view your experience a little bit differently. So you may have to talk to a couple of different lenders if you know for a fact that you don't have great direct industry experience.
Are you able to work with somebody that's like you personally able to like help them through the SBA process and like walk them through every single detail? Like, because a lot of people, I think, when they're trying to go down this route, they don't they're a little bit tentative and they don't really want to typically pull the trigger because they are dealing with a guarantee and they just need somebody there to just kind of guide them through it.
Yeah, I mean that's part of my job, right? So I'm a loan officer here at the bank, and I am your liaison to the bank essentially.
Right.
So I'm your primary point of contact from the day that you decide that you want to get an SBA loan when we speak until the day that your loan closes. I'm going to be the number one person that you're going to speak to. And so oftentimes these initial conversations are me telling you kind of the good, the bad, and the ugly of the SBA loan. Hey, yeah, you do only have to put down 10% and you get a 10-year term, which is awesome. But hey, this is also going to be a floating rate. And it's going to adjust quarterly based on what the Wall Street Journal Prime does. And it can go up and it can go down. Hey, this is awesome. You're going to be able to get this transaction funded because the SBA is willing to provide this guarantee. Otherwise, the bank wouldn't do it. But hey, just so you know, you're going to have to put your house up as collateral, right? So, there's pros and cons to SBA lending, certainly. And yeah, the one thing I try and do when I talk to customers initially is I don't try and sugarcoat it. I try and tell them, hey, here's what you're signing up for. This is a personal guarantee. And if you fail, we are going to ask you to rectify the situation, right? And that can also that can oftentimes mean you may file bankruptcy if you fail. That is where it goes for a lot of people if they do end up failing with SBA loans. So, yeah, it is a serious conversational topic and something that I do try and explain to people on the front end, but I also do try and handhold them through the process kind of as we go from step to step, because it is typically about a 60 to 90-day process from start to finish.
Okay. And then like, let's just say somebody listening to this found a deal that they really like. They realize it is cash flowing, so it's not as risky, like when they're trying to acquire it. If they were to send that deal over to you, would you be able to just glance at it and actually say, hey, this might be something that you could move forward with, or you know what, just probably keep looking ultimately?
Yeah, absolutely. I do that all the time. So people send me deals and say, hey, what do you think about this? Can we get this done? And yeah, I'll give it a quick once over, do a quick standalone cash flow analysis just to make sure the deal makes sense. And if it does, then yeah, I'll give them the green light on it, and then they can go ahead and they can make that approach with the initial LOI, and then hopefully we get it to a closing table.
Love that. And what do you think is like the most, I always like kind of bringing this up on every conversation I have, but what do you think is like the most powerful thing you find with partnering with other people like yourself or investors or people that are actually skilled in what you're trying to achieve when it comes to taking these transactions down? Like, why not just do it all by yourself?
So, the best thing about partnering with people who are experienced, especially in the acquisition space, is that it makes the transaction so much smoother in terms of actually getting to the finish line. If you have a good CPA, for example, I'm not going to have to chase you down for financials, which like literally, if it's a 90-day process, 20 of those days are often me chasing someone down for financials.
Right.
And it can be 1 day or 2 days if you have a really good CPA there. Same thing with, having a good transaction attorney. If we get your APA and, the bank's attorney is poking holes in it and thinks that it doesn't hold up, in court, or it doesn't hold water, then, that's going to take time for us to potentially, work through that entire scenario. So it's important that you have a good deal team. I can't emphasize that. I mean, you know, especially when it comes to lawyers and CPAs, I tell people you can pay now or you can pay later, right? It's how you want to play it. But you know, I don't think that it hurts to pay more upfront now to get something that's airtight and that really is protecting you, just in case you ever do need that protection, right? So for me, having a good, again, CPA, a good lawyer, a good SBA lender who actually knows the process, who actually closes a lot of deals, because that's the thing. A lot of SBA lenders kind of dabble in the space. They don't actually close a lot of transactions. They may actually be conventional lenders that kind of moonlight as an SBA lender. You want a bank and a BDO who really does this on a day-to-day basis. You know, my bank is a top 10 lender in the space. We're a bank that's really built on doing SBA loans. And so that level of experience has helped close a lot of transactions that other banks, quite frankly, wouldn't have known how to get closed, or they would have just passed on because they felt like it was too complicated. So there is something to be said for picking a good team, people who have expertise that can actually help shepherd you to the finish line.
Love that. Yeah. And then what do you think, like what would you want the audience to know about going to the SBA, like ease their mind a little bit and see, like actually help them understand, maybe it's not too difficult, or maybe there's a big roadblock we didn't kind of cover here that we should probably talk about or be aware of besides the credit, the money injection, like what is like the biggest thing in your mind, do you think?
I mean, the biggest thing people need to know is that it is real. It is possible. These transactions are closing every day. I probably do about 30 transactions a year personally. And again, you know, I average about $50 million a year in production. So, you know, there's an attainable goal, right? You can get to the finish line. The bad rap that SBA gets is that it's just a never ending process that, you know, takes 6 months for you to close on a transaction. Those types of deals do happen. I've heard about those types of deals, but it's oftentimes because you're not working with an experienced lender, okay? Or something went terribly wrong in your transaction. If your transaction is taking well beyond 90 days, something went wrong in reality, right? And so don't get discouraged by the SBA process. Don't get discouraged by the paperwork. Put one foot in front of the other. Just do the work. There is light at the end of the tunnel, and eventually you will get closed.
Love that. And then where can people go to actually find you, Sterling, so they can actually start sending you opportunities to look at?
Yeah, absolutely. So you can certainly find me on social media. I'm sterling.sba on both TikTok and on Instagram. Or you can go directly to my website and book a time with me for a consultation, or even apply directly through my website. And my website is sterlingsba.com. That's Sterling SBA, like Small Business Administration.com.
Love it. We'll put that link in the chat here. Thank you so much, Sterling. It was an honor to actually speak to you, and hopefully we can do another one soon.
Absolutely, Justice. Thank you so much for your time. We'll talk soon.
Bye.